Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of July 21st, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week was a roller coaster ride for mortgage rates. If you take a look at the bond chart on the screen, you can see mortgage bonds have kind of been on this roller coaster, selling off, coming back up, selling off, coming back up. So last week, mortgage bonds sold off, but then found a bottom on Wednesday and recovered. The green candle's up, right about where we started. So Maryland mortgage rates, even though they didn't move higher during the week, actually ended the week about where they started. Now, we're going to recommend floating your Maryland mortgage rate to start the week to see if this short-term trend can hold and mortgage rates could move slightly lower. But be on guard. Crazy volatile week. We could see the roller coaster ride continue, so we would quickly switch to a locking stance if that happens. So let's dig into the news. Mortgage bonds should have continued selling off. The reason why they rebounded and popped back up was from two big geopolitical events going on in the world. The first one was the Malaysian Airlines Flight 17 was shot down over Ukraine last week. Now, it turns out it was shot down by a SA-11 surface-to-air missile, which is a Russian-made missile. And it was shot, the missile came from territory controlled by the Russian-backed Ukrainian separatists. So pretty much all fingers are reporting to the separatists that are backed by Russia that shot down this airline. And more news to come out of that. But that created a lot of uncertainty in the stock market. And then the second big thing is Israel has mounted a ground offensive. The Israeli army has moved into the Gaza Strip. And the reason why they did that is Hamas broke the truce, has been firing thousands of rockets into Israel, and they also, from underground tunnels, sent some Hamas militants into Israel. Now, they were all killed, but so Israel moved in, the army. They're trying to destroy those tunnels, secure the Gaza Strip, stop the rocket firing. Basically, they're pretty much saying Hamas broke off talks that Egypt was brokering for peace talks, stop the truce. They got no choice but to move in and stop these attacks on Israel. So those two big events have moved money out of the stock market into what's called the flight to quality. So it's moving money into the bond market, which has helped mortgage rates, helped the bonds rally back to where they started the week. So we'll have to keep a lookout on those two stories, because as they develop, they could either hurt or help the bond market. Now, other economic news. Thursday, we had the weekly initial jobless claims come out. Came out at 302,000 claims, down 3,000 claims from the previous week. Weekly initial jobless claims have been trending lower for over the last couple of months, and the 4-week average set a new recovery low at 309,000 as an average. So that's great news on weekly initial jobless claims. But other economic news, retail sales for June 2014 were released and showed cooling off of retail sales, only increased 0.2% below expectations, and the lowest since that big negative, almost negative 0.1% in January 2014. So retail sales account for almost 1/3 of consumer spending and are one of the main drivers of the U.S. economy. So a decline in retail sales is something we need to watch. But the softer retail sales does support what we saw in the GDP. We saw weak GDP numbers. That's going to be supported by weak retail sales. So hopefully retail sales can rebound, and we can see the GDP rebound as well. And housing news, we did have a good report last week. The National Association of Home Builders, commonly called NAM, NAHB, the housing market index for July 2014 came out much better than expected at a number 53. This is the first time the index has been above 50 this year, and this report shows a rebound in the housing market for new construction. Builders are attributing the jump in the housing market index to the improving job market. But we had two other reports come out after that, two measures of new construction. The first being housing starts for June 2014. Very gloomy, declined by 9.3% from May to June to an annual rate of 893,000 units, well below the 1.02 million expected. And then building permits for June 2014 also fell by 4.2% to an annual rate of 963,000 units. So building permits is a sign of future construction. Now, these reports are both disappointing, but they're not terrible. And they both conflict with the NAHB Housing Market Index. Now, the Housing Market Index is actually a new report. It came out July. The housing starts and building permits are from June. So looking at the newer report, looks like a good sign for housing. We're going to have to see how the numbers shake out in July for housing starts and building permit to see if the Housing Market Index from NAM is a good predictor. So we're going to be able to look out for that, because some mixed news on new construction. The next local event, the next free first-time homebuyer seminar is Saturday, July 26th, that's in Towson, Maryland, on Delaney Road at the Sheraton Baltimore North Hotel from 10 a.m. to noon. And then the next one in Frederick is Saturday, August 9th from 10 a.m. to noon at the Holiday Inn Conference Center. And then the next one in Laurel, Maryland is going to be is actually going to be August 20th. So you can register for either one of those events by giving us a call in the office at 410-412-3319, or you can register online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.